Happy Friday, traders. It's Friday, the 5th of April, 2019. It's 8:01 a.m. Chicago time. Um, just as a note up front, I'm still struggling with this extremely sore throat. Had to take the day off yesterday. I haven't taken a day off in a long, long time. So I may sound faint, but I'm sipping on water with lemon and honey in it just to kind of keep my throat lubricated. Um, so just bear with me. Derivatives trading involves substantial risk of loss and is suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on, of course, the non-farm payrolls came in at a much higher 196 versus 177,000 expected. The unemployment rate remained at 3.8%, which was what was estimated. The SOC, or the scene of the crime, or the point in which from which the market popped off on the non-farm payrolls, was 28.86 even. The market pushed to 28.9350 and has been sitting sideways, not much action since the number came out. 28.89 quarter is the high of Wednesday, which is also a weak high. It has two TPOs on your market profile there. So that's how things are shaping up. The Nasdaq's up quite a bit, well, 30 points, and the Dow's behind there. The S&P's up 8.25 points. In terms of what we are looking to today, really the biggest announcement has already taken place. We do get Fed Bostic speaking at 3:30 p.m. today Eastern. I'm not expecting too much there. And of course, there's no review segment for yesterday, so we're going to hop right into, well, let's review what's it's done. Oh my God, throat's really killing me. So yesterday was an inside day. Wednesday was a little bit stretched. As I said, it left behind a weak high 28.89 quarter and turned over and pushed into Tuesday and Monday's range. Yesterday just tested up and down and held somewhere in the middle, kind of expected ahead of non-farm payrolls, and so we get the consolidation. If we look at how things looked on both days stacked, so you see that there's not much balance there. It's really exploring up and down and has pushed higher. So that's what we have yesterday. We finished inside of the IB. It was a normal variation day. As far as the overnight session is concerned, we pretty much held sideways, a little pop on the Asian market open, but mostly sideways as expected, and all of it's waiting, anticipating this non-farm payroll release. So this is where we are. The pop off on the non-farm payrolls was not that big. I mean, 28.86 to 28.93, 7.5 points. Not much. Not much there. My suspicion is that so we're building a high volume node here. My suspicion is we're likely to pull back down to at least 28.86 before we base and decide what we do next. This leaves us with a pretty tough read on what is likely to happen next. So let's take a look at the expectation for today. As I said, there's really not much of a review since I didn't do a trader bite yesterday. So there's a lot on top. We're getting really close to the 2900 century figure and to all-time highs. The shorts have been squeezed and squeezed, and the market just keeps driving forward. Last week's weekly high, is much lower. The last week's weekly high at 2840 Last week's weekly close is 39.75. It's actually 28.40.50. We left a gap from Monday, and we pushed higher ever since. So we're one time framing up on the weekly, at least this week starting, and so there's a fair amount of strength here. As I said yesterday, qualifies as a continuation of the one time framing up that started this week. We had a higher low. We don't care about the highs. We have a higher low. The market's not able to push through the lows. And so it really the push is to the buy side, although the better opportunity on the non-farm payrolls was to sell the push higher, was to sell the push higher as a scalp, and that's basically what I did. So here we are. We're holding sideways in this area between 28.89 and a quarter and 28.96.75. What are we expecting for today? This morning, I'm expecting this gap to close. I'm expecting an open auction that pulls us back down. I'm looking for, as I said, 28.86. Consolidating here, I'm looking for it to dip down into the prior day's point of control and then push higher and then take out the overnight high and hold steady here, 28.96 or so. I'm not looking for too much to happen today. Um, I don't have high expectations of range or anything else. There really isn't much to work with here. The secondary is an open auction that pushes down, impulses up, takes out the overnight high, pushes into the 28.96.75 where it consolidates for a while, and then it starts to work its way into the century figure, probably failing on the first test from below. That's scenario 2. Okay, so that's how things are shaping up. We've left some key areas behind, 28.58 and so on. It looks relatively strong, but on a short-term basis, I'm looking for this to fall back into this 2-day balance right here before it makes its next move. That's it. So it is like Friday. If you feel like it, please hit the like button on your YouTube screen. If you don't see it, just go to the bottom right, click on the YouTube logo, and find it. Find it on YouTube. Just hit the thumbs up. It may require you to log in. I'd appreciate that. It helps people find me more easily. And hopefully you have a great weekend today. It's really important to be conservative and to be patient. Good luck.